All right, good morning. Let me know if you guys hear me all right. All right. Yeah, dollar yen, man. I missed this one in the 4 hour time frame. Beautiful. This was at like at 5 o'clock. So if you're someone who's like, depending on your time zone, I mean, there was two of them, but this one obviously is the better one because this one takes out Asia range high. This one was kind of like in rollover period, but beautiful. That's this gold just literally just ripped straight off the open. Oh man. NQ potential sell. Yeah, so this is why I kind of want to come up on here. I kind of just want to talk about the setups that I'm watching for or lack thereof for me personally, because I think it's cool to show people also like when I think it's a very common thing in the trading space where everyone just shows like, oh yeah, this setup worked, but like they don't really talk about certain circumstances where maybe the market is not really that high probability. And again, high probability is going to be different for each individual person, right? So let's just get straight into it. So NQ, I talked about how I wanted to see, like I wasn't going to be bullish until we inverted this area, and it was because of this exact reasoning. We have SMT with ES, so there's potential downside. Then not only that, but Trump, and I'm looking through Twitter right now. Yeah, so Trump essentially there was like tariff news about Trump threatening tariffs on Europe, depend in certain countries if we don't like acquire Greenland. That's essentially like why the market had this big gap down. So again, tariff news back in play, and we've kind of been in this story multiple times. Now, the question is going to be this, right? What do I see currently with NQ? And if I'm being honest, I don't really see much if I'm being honest with you guys. And the reason being is because again we've gapped down and we've pushed lower. However, now we're below this these weekly lows. So if I go to the weekly time frame, we're below all these lows. On the daily time frame, we're below this low as well. You see, we're kind of inside of this overall range. So there's like a little bit of a fair value gap there. If we go to the 4 hour, you'll probably see a little bit better. Do we have a relief move back up? But that's a problem, right? I don't like to buy something like this when the market structure has been clearly down, especially last night. We had a push up last night and then we broke back below. So we're inside of this current bearish swing. However, this bearish swing does not necessarily mean I'm going to go look for sells because we're below key lows. We're at a key higher time frame level. And let's be honest, NQ has just been consolidating. So this is like the type of condition that I personally don't like to trade in because of this. Because right now we're kind of at a quote unquote support or below low liquidity. So do I want to continue shorting this? No, not really, to be honest. Now, let me clarify. Does this mean this can't go lower? No, like we could completely sell off. But I'm talking about like for me, for Omar. What do I not like to trade or what market conditions I don't like to trade in? It's these, because I like to look for like essentially sells at resistance, think of it like that lens, or buys at support when the market has clear context or direction. So for me personally, I don't really like ES or NQ as of right now. Um, yeah, just because again, for me, I need a clear 4 hour direction or a daily direction. And for me personally, I don't want to keep trying to sell this, especially with this gap up in here, because this leaves potential for the gap fill. Now, as we know, as we've seen multiple times throughout last year, especially towards Q4, the gaps don't always get filled right away. So like this doesn't mean this will get filled either right away. So when I have conflicting narratives or I'm not sure, I just usually walk away, even if ES or NQ had like a 1,000 point drop. Remember, when it comes to trading, is finding the opportunities that you are looking for. And right now, I don't really see anything in here, if I'm being honest. So typically, I'll go through the watch list. If I don't see anything on indices, gold, I mean, this just ripped straight higher. Like, I'm not trying to short this. I'm not going to, and I'm also not going to try to join trend because there hasn't been any pullback at all either, right? So there's really nothing for me here in terms of trading this. And again, it is what it is. And the thing is, so pound and euro actually had interesting moves last night. I saw this daily EBP. I know most of you guys probably have seen it as well. Beautiful rip higher, but it ripped straight out of Asia. Especially euro. Euro didn't euro didn't even look back. I mean, this was crazy. But this is what happens when we kind of have like economic news drivers. So sometimes you have the higher time frame setup, but then what happens is you don't get the opportunity to be able to capitalize on this type of move. So, and now do I want to short this? Not really. So for me, to be honest, I don't really see much across the board. Yeah, like for me, everything on my watch list currently, I don't really see much, to be honest. So it might be a slower day for myself. So I'm interested. What are you guys watching? Let's see if there's anything else. I hope everyone's doing well, man. I hope everyone's doing well. But yeah, because again, like for me, I don't want to like force any potential trades. That's just not my style, to be honest. And I think that's like, and I know it's like, okay, sometimes you go, like, let's say, obviously, we had like Martin Luther King Day yesterday. So a lot of people want to come in and trade. And then you want to look for opportunities because it's like already the new day. But it's also one of those situations like, do I really want to force anything in this market, right? As of currently, where we currently are at, right? Not really. So I'll probably just let the market trade at the open. And then maybe I'll recheck again during the PM session at 2 o'clock. Because right now, like, I'm not going to try to risk any capital on this, to be honest. And it sucks because right now I have one more benchmark day that I need to get done with Fundednext, like in order to request my payout, right? And obviously we had MLK Day yesterday, then we had today. Right now, nothing really looking like it's setting up. Do I want to force something right now? Even though, because I want to get my payout, right? It's natural. I want to finish that $100 benchmark day so I can request my payout, tomorrow after rollover. And these are the psychological things that you kind of have to be aware of. Like, I want to take a trade. I want to be able to just get that last benchmark day, request my payout, and then kind of like, move on. But what am I going to do? I'm going to have to be patient. That's just the truth of the matter. All right, let me see. Yeah, so this market structure, so if you go to the YouTube channel, like of this one, right? Go to the live session. The live session is where it is. So you're not gonna, I'll show you right now. Let me just go to it. So it's not gonna be in the video section. It's gonna be in the live. If you go to live, it's going to be right here. If you're struggling with market structure, watch this. This is the full presentation on market structure that I have. We did this one on live. I know, bro. It's like the worst thing in the world when that happens. Like when your TP is like right there, the market is right here. You're like maybe like $3 short, and then either you get a big retracement or you just end up just closing the position because it kind of like flirting with the TP. That's the one thing about prop firms, man. You can't let those things, as annoying as it is, just like set you until. Because again, right now I have literally one more day just of $200 on Fundednext futures, and I will be able to request my second payout with them, and I'll be able to complete this challenge that I've been trying to do since middle of December. I want to just get it over with, finish it, so I can have obviously the YouTube video ready. I can have all this stuff ready so I can just post it. But I mean, I'm not going to force the trade and then potentially, like, yeah, there's no point. It's just $200 too. So I'm just waiting for a nice clean setup. And whether we get that set up today, whether we get that set up tomorrow, I'm going to have to wait and see what happens. Let's see, dollar yen. Dollar yen, this one went straight off the open. It's kind of like what I talked about. Like, this is why it's so important to have like daily buys. Like for me, we were above liquidity. So again, the market likes to go from liquidity pool. And I know some of you guys, if you just trade futures, it's fine. This is the same concept that applies. When the market is above highs and then we start to see bearish rejections, like look at this, we have one bearish rejection. We have this bullish candle push up. It's more of an inside bar because we're inside of this prior candle. Then we have a breakdown below when we kind of close below that candle bar's low, creating this as an order block. So now naturally you're going to anticipate the next candle to go back into a discount. So where's the nearest discount from this price leg, right? This fair value gap. And what did we do on straight off the open? And that's why this was my favorite play off the open. Beautiful, right? Now, was there like a real setup in here? Not really. Like you kind of had like, yeah, this one was just, unless you sold it at the open, maybe you use this gap or stop, Y stop. But the whole premise is like these are the type of higher time frame plays that I'm looking for, right? Where there's a clear downside objective, whether this is going to be a reversal or some sort of continuation move forward. Now, I'll be honest, right now, I'm not really sure what dollar yen wants to do because we're sitting at that daily fair value gap, right? We're sitting at that daily fair value gap. So if I line this up, if I lined it up right, we kind of just took out the Asia range low, but we're also contending with this overall swing. You see what I mean? Like these are the types of markets I don't like to trade within, where like there's a clear resistance and there's a clear support. Because at the end of the day, it's like it can just kind of consolidate, or the price action is just going to be a little bit choppy. So yeah. Okay, we have about like 19 minutes until market open. US 30. I actually have it down here. Yeah, I mean, to be fair, I will say this. I do think indices overall look pretty weak, especially with all the news out there right now with Trump's and like, you know, kind of like threatening tariffs. It's the same thing that we saw last year, literally in the Q1, where Trump, like if you go to like NQ, for example, if you go to, let's go to the 3-month chart, right? Look what happened last year, literally in January. So this candle right here, let me zoom in. This candle right here was the first month of the year, right? We had the tariff news, and then going into April, we had that huge decline. And it literally looks like history is going to repeat itself. Where Trump is going to maybe flirt with tariffs, gives the market like a big pullback, maybe into this area in here. And then maybe we start to have that rally forward. So it's the same type of narrative. That's why I'm like leaning more, especially because we have that SMT. Like if you look at the ES, we took out the last candle bar's high, which was pretty much the last quarter's high. And Q, we did not. And again, we talked about this as well. So now, do we see a sell-off continue forward? If someone asked me like, okay, a gun to your head, like, what would you think that in terms of what the market is going to do? It's still pretty tough to me, but I would lean a little bit more towards the bearish side. Which US 30, to be fair, looks. Yeah, US 30 also, like, again, same thing. I think indices, if I had to choose right now, possibly bearishness. But again, I'm going to wait until I get like a clean bearish setup. Because right now, look, again, even on the weekly time frame, we're inside of this overall consolidation. So I'm not trying, this is the problem with trying to short and look for the breakout of the range. The problem is if you look for that breakout out of this current range, right? The market could easily just find support where it's been finding support inside of this consolidation. If that's the case, right, and you're trying to look for an intraday short, you might get squeezed. And that's why I personally don't like to trade sells at the bottom of a consolidation range, because yes, can today be the day that the market breaks out of this? Possibly, right? But if I miss that move, it's fine, because I know in my rule sets over the course of time, I'm going to keep taking losses trying to short at lows. So indices overall, I'm leaning towards on the bearish side just because of that big SMT that we have on the higher time frame with NQ and ES. But again, I'll need to see something a little bit more for an intraday entry. Especially because we had such a big gap down as well. We went straight lower. Yeah, man. And that's the thing about the psychology. That's why prop firms, that's why they have those like benchmark days. Like in futures is interesting because there's way more rules in futures. And I know a lot of people think futures firms are better than CFD firms. And I do think that, I'll say this, I think it depends on the trader. If you're someone who stacks accounts, futures is probably a little bit better because then you'll be able to trade multiple accounts. But like if you're not trading multiple accounts and you're the person who likes to trade one account, in my personal opinion, I think CFD firms are going to be better for that trader. Because like for example, right now on the account, I'm up $6,000, but then I can only withdraw 5,000. I mean, I'm sorry, I can only withdraw 50% of this, which is 3,000, which is why like that current challenge that I'm doing for YouTube, I need to get 2 payouts. Unless I did a $10,000 profit, which I was just going to keep withdrawing regardless. So like, but if I get $6,000 on a CFD account, you know, I'm withdrawing 80% of that, which is $5,400, right? So like that's a $2,400 difference, man. I don't know. I just feel like if you're someone who's trading one account, you're better off trading with CFD firms, even though they cost more, to be honest. Yeah, they cost more, and there's like it's more difficulty in terms of challenge because there's more requirements. But I think in terms of like the payout, like you're gonna get paid way more compared to futures. That's why these firms do that. Going back to your point about psychology, like that's why the firms do that, because they know like everyone wants to rush. Like right now, I want to just find a trade, get a quick $200 scalp, and then be done. But then I don't want to like take a loss, and then I'm like, damn. Now I'm just like slowly like losing money on dumb trades, because it's happened to me, right? It has happened to every single person in here. I'm pretty sure. Where you're like either you're like 0.5% away from the TP from the profit target, right? And then you end up now like losing so much money because you're just trying to get that last 0.5. So you're just taking any random trade just to get it done, right? I'm pretty sure we've all been there. Yeah, dollar yen, nice 4-hour ABP. We go to the 4-hour time frame here. We did take out the low already, and we're kind of seeing at the daily fair value gap, so it's a little bit more quote unquote tricky. But yeah. Yeah, because if you look at the 4-hour ABP in here, right, the problem right now is that we're kind of seeing at the daily support. Now, again, does that not mean like we can still head lower? No, this still looks pretty. I would not be shocked if we at least came back to retest this prior high in here. But the question now becomes, the thing is this, I would wait probably for a confirmation. This is one of those things I would wait for a confirmation where like we have this clear 1-hour fair value gap, and then I would wait for like maybe the market just kind of chops around. Maybe we see a 1-hour like bearish fair value gap being created, and then I would be more interested in this lower high versus just selling it immediately on the push up because we've already taken out liquidity, right? So these are the moments I typically will wait for confirmation if the market already took out some sort of key liquidity pool. Like we took out the 4-hour EBP low, we're seeing at the daily fair value gap. So for me, I would want to see this lower high being created, right, in this area, in order for me to kind of like be more comfortable for shorts. But I would not sell this right away as the market pushed up. Also, your fib, do you trust 70% more or 61? It doesn't really matter. I'll just say this: if you're focusing on the fib, like okay, not this specific setup, but let's just the 62 in my. If you wait for the 70, the problem with the 70 is you're going to miss more trades than not. And here are the settings, because I know people always ask me this. It's gonna be this for others. These are the fib settings that I have. Euro USD bias, honestly, man, like it already pushed up, so I'm not going to be looking for continued longs. Funny enough, I saw this last night and I wanted to look for potential longs going into today, but then in Asia we just ripped higher, you know. So it's like if we go to the weekly time frame, where are we at right now? Right, we're above prior week highs, we're inside this order block. Do we just absolutely just rip higher? I don't know. See, again, because now we're kind of sitting at support here and we're kind of sitting at resistance on the euro. So for me, I always like to look for potential plays near like lows and try to like look for clear premium targets. Like, as you guys have seen like in the past, like what I talk about in Telegram, that's typically what I'm looking for, is clear resistance down to a clear support, or a clear support to a clear resistance. Now, I know if you're trading like ICT or SMC concepts, they're called PD arrays, right? Same shit. Same, but I just like, for people who are like more on the beginner side of things, I don't want to confuse them, because that's really what it is. Find the market showing you a bullish setup as support with a clear resistance that has not been traded to. That one phrase is exactly what I'm looking for every single week. Give me 1 second, guys. Sorry, give me 1 second. right, sorry about that, guys. I just had to go use the bathroom. So on Fundednext, the current one that I'm trading right now is the legacy account. So let's go ahead. The legacy account, again, it depends on your personal preference. But for me personally, this one was the best account when it comes to like on the future side. And I'm going to be purchasing once I get this payout and I'm done with this challenge. I don't know why, like every single time I try to click their futures plans on the website, it does this weird thing. It just doesn't even load. I'm not even sure why. Yeah, like I don't know why it doesn't show every single. It's like super annoying. But yeah, it's called the legacy account. I'm not sure why it doesn't show. Like it shows the CFD plans, which this is probably the plan I'm gonna go for once I get the next once I get this next payout. I already have an account with Alpha Capital. You guys already know, like that's probably one of the firms I've constantly used for CFDs. But Fundednext, they're now back in the US. So like I personally am gonna go for the Stellar one because it's just a one challenge, right? The profit target is 10%. You do have a 6% maximum loss limit and a 3% daily loss, but you can trade on the news. It's only 2 minimum trading days and your first withdrawal is 5 days. This is honestly like, this is a big factor to me. I want to be able to get a payout like fairly quick. The problem with the two-step plan is like the first withdrawal is 21 days. It's cheaper, but you know, the other one is like 20 bucks cheaper. It's a one step as well, so you only need 10% versus, you know, the 8 and 5. So I personally like this one. This is the one I'm probably going to go for next once I get this next payout. I'm going to show you guys which one I'm trading with now, but I don't know. It does not load. I don't know why the futures side. You know what? Let me just Google it. Fundednext legacy account. Yeah, maybe I'm going to have to like... Oh yeah, perfect. It just showed up right now. All right, so the legacy challenge is the one that I personally prefer. So the rapid challenge is this one where you have a 40% consistency rule on the Fundednext account. So there's no consistency rule on the eval, but once you get funded, there's a 40%. The legacy account, I don't know why it's not clicking. I'm not sure what's going on with their website. But the legacy challenge is different. So everything is pretty much the same. The only difference is that the consistency on this one is going to be on only the eval. But then once you're funded, there is no consistency rule. And for me, that's what I prefer. And I did the 50K account. It was cheaper then as well. But I think if you use, I think the legacy account is cheaper. God knows why their website is being a little bit of a pain. But yeah. But yeah, again, for the consistency rule, the only difference is the 40% consistency on the rapid challenge is going to be on the funded. So on the evaluation, you can pass in 1 day. That's why it's called. So that, again, if you're someone who's a scalper, maybe you prefer this type of plan because you can get funded in 1 day. However, the legacy challenge is 40% on the evaluation. So realistically, it's going to take you at least 3 days to pass that based on the consistency requirements. But once you get into funded, you don't have to worry about that. You can just trade freely, and that was my goal. Now I recorded the whole challenge as well. I recorded everything from the challenge to the first payout to like now I'm waiting for the second payout, and then that video is going to be up on YouTube. So you guys will see the difference in terms of those two challenges. But yeah, like for me, it was important for me to not have any consistency on the funded, because again, man, like if I see a really good setup and the market moves a lot, like let's just say, imagine you catch like a big move like this, right? Versus a day like this where the market might be chopping back and forth. I'm going to obviously make more money on a day like this compared to a day like this. So in my opinion, the consistency rule is just makes it more difficult. So for me, I am the type of trader that I need no consistency on the funded stage. And like the legacy account was like that. And I don't mind sacrificing on the eval, taking my time with it, to be honest. As long as I know once I'm funded, I can just trade normally. I don't have to trade with all these like rules and parameters. NQ 4-hour fair value gap, respected 15-minute plus order block, 5-minute market structure shift. Look for New York this week. The problem with this, man, is like, okay, I get what you're saying, right? So saying the 15 minutes, go to 15-minute. The problem is this, right? Just because you have a reaction like this on the 15-minute, right? Okay, so this is the thing. Right now, the thing is this: when you have the market like below liquidity pool, because some people will think, okay, well, I'm going to look for a potential long when we have below low and have a key fair value gap, right? That's the most common thing that I've seen on social media, right? Key level, sweep of liquidity, we're going to look for longs. The problem is this. The problem is, number one, the 4-hour right now, as currently constructed, is going to be, you're fighting this bearish impulse leg lower. Now, can this ultimately be the low and then we rip higher and I miss a potential long in here? Absolutely. However, the problem is this: I am not going to look at this one minor push up as like a key market structure break, because you need time frame alignment. I've talked about this before and I have a video on my main YouTube channel, and I actually have another video on that one as an updated version. Now, what is time frame alignment? If the 4-hour is currently in a bearish leg and the 15-minute, this, if you're looking at this as your bullish leg, you're fighting the 4-hour bearish leg. Think of like the waves of a current, right? Like imagine you're like swimming. You want to go swim with the waves. If you're trying to swim against it, you're going to have a hard time because you're going to have all this force pushing against you. It's the same thing when I have like this type of thing happening where the market is dropping lower into a level, and then we have a strong bearish leg in here on the 4-hour time frame. But then the 15-minute, someone could be like, oh, well, this looks like we've inverted this fair value gap and like we're going to rip higher and we have these equal highs and we have this gap. And again, this could be the thing, but I would need to see something a little bit more strong in terms of like whenever I want to look for a long off a certain level. Like the 15-minute break of structure doesn't work for me. That's why I always say, for me, I always look for the 4-hour and the 1-hour to confirm. And the reality is, even on the 1-hour, there's really nothing. This is just a little bit of a retracement higher, right? So unless I see something, unless I see a very strong 4-hour or 1-hour confirmation, right now I'm just going to be patient, because if we do see something, the market opens in about like 1 minute, right? If I do see it like a 1-hour or 4-hour bar that closes strong or forms some sort of setup, then I can look for this as a potential target. But as of right now, for me personally, it's risky because I'm going to be fighting this current 4-hour swing. So hopefully that makes sense. Now, again, the market could easily just rip higher, and that's fine because I'm okay with missing those plays, but I'm not comfortable going against like a 4-hour bearish swing like this. I'm just personally not, because I've been in situations like this where I tried to get in a long and then the 4-hour has a clear bearish leg, and then I either get stopped out or I get a small move and then the market goes. So the market open is right here. So we'll see what happens. And also, like the reality is, like when you look at this overall drop lower, you're contending with these fair value gaps as well. So even if the market does push up here, then you have to worry about this potential being a fair value gap that, you know, could offer some sort of resistance. And here's the thing: most people say, okay, well, if you think that, then why wouldn't you just short that and look for the next leg lower? But it's because we're at we're at a support, right? We're at a key higher time frame level, and at a key higher time frame level, when you have, that's what I'm saying, when you have conflicting things, when you have like a bearish leg, but then you're at support, the problem is I don't want to go long or short. I just want to wait and see what happens at this area. Versus, imagine you can get like a short in here, and then you have like, okay, for example, look at the dollar yen as an example, right? The daily chart that we talked about. I have a clear support that has not been traded to before we obviously hit it on this specific day on Monday, right off the open. I want scenarios like that where the market is at a key resistance level and we're showing bearish price action, and then I can just anticipate the continuation to a key level. That's all I'm trying to do every single week. And that's why you guys see, like, typically on in the Telegram, the moves that I wait for are usually fairly accurate, and it's because I'm just waiting for that very simple thing. It's not even like any real crazy skill. It's just waiting for good opportunities. That's really what trading is about, in my opinion. Because this right now, in my opinion, is 50-50. I've been trading for a very long time. This is going to be either 50-50 or the price action might not be that clean. Yeah, I'm actually looking at them lucid trading as well. The problem is this, they came out with a new plan. I have to look into it, but apparently people were saying it wasn't as good as some people were making it seem to be because you need a bigger buffer. So I'm gonna look into that one as well. I'll be honest, I think the top futures firms in my from what my personal experience, I think number one is Top Step. Outside of the problem is the Project X thing always like their platform always like messes up. That's the real big problem with Top Step. So if you don't want to deal with like potential platform issues, I personally think the next two, and this is I haven't tested my funded futures yet, to be honest. But from their rule sets, I really like, I think it's their pro account, where they also don't have any consistency rule on the funded. And the problem, this is also another reason why I'm kind of like not the biggest fan of future props. And you really need to have multiple of them, is because you only get like a 50% payout up to a certain amount. So even with my funded futures, I think the maximum payout for the pro account is like $2,000. Top Steps max is like 5,000. And this is also why I like Fundednext, because Fundednext is also 5,000 bucks. Is the up to like, so you can get up to 50% up to a maximum of 5K. Now I could be wrong about this. I think there's an add-on that you can have for my funded futures to get up to a $4,000 payout. But yeah, Lucid though I haven't really checked them out as much. And to be fair, oh yeah, and also I'll say this: Apex is only good if you want to get multiple accounts for super cheap. So like on the 90% off, whenever Apex has those, you can buy a bunch of challenges for like $20, which is kind of insane. So if you buy 10 accounts for 200 bucks, that's an amazing deal. Now, obviously you have to activate them, and the activation fee is usually going to be about like $85 when they run this promo. Realistically, it's funny, the 90% off and the 80% off is really the same thing all in. So in order to get funded, it's the same price, but the reason why they like the 90% off codes is because at least it's less money up front. Because then you'd have to activate them for $85 versus the 80% off, like the one that they currently have right now that's running. This would be, I think it's $65 to activate the accounts, but the account is going to cost like 40 bucks. So you see how it's pretty much the same math. It's still going to be $105 all in. But if you're someone who likes to buy multiple challenges and you just want a full port, it's better to wait for the 90% off because it's less cost to you up front. Because if you buy 10 accounts on the 80% off, you're going to be paying $400 versus $200. So that is a pretty big difference. Now, if you're someone who takes your time, then it doesn't really make a difference. Nah, not yet, but I saw like the new accounts. I want to try the pro account, but I think they nuked it and they just opened up a new one. Like that new account, I think it's called Lucid Black. But again, guys, I think it's just simple. Just find the one firm that you like, get funded, get a payout, and then start looking at other firms. I think they're all the same. It's the same thing in the CFD space. It's like, oh, which firm is better? Which firm is better? Like they all have very similar plans. It's almost identical. It's just very small nuances. And in my opinion, again, unless you don't really crave that Top Step, like let's say Top Step, you have an issue with their platform. In my opinion, man, I think Top Step is like probably the better one. And I think Fundednext is a good solid second based off the rules. But again, the big difference is with Top Step and Fundednext, number one is the pricing. I think Top Step you can get an all-in account for $90, which is amazing. And not only that, it's a 50% consistency rule on the eval. Versus Fundednext is a 40% on the eval. So that makes a big difference because you can pass this Top Step account, the evaluation, in 2 days. If any firm has 40 or 30%, it's gonna take you anywhere between 3 to 4 days to pass. Now again, that's why I mean like it depends on the individual, because at the end of the day, the individual is going to be the one who's going to have to kind of figure it out for themselves. Because are you someone who wants to rush through the challenge, or are you someone who like you're okay taking even 2 weeks for a challenge? Because if you're someone who just takes your time anyways, then even then I think still Top Step has the best offer. You know, and again, this is me being unbiased because for me, everyone knows Top Step doesn't have any affiliate programs. But I always want to just be very honest with people. I think Top Step by far in terms of the pricing and in terms of the offering is the best. But people have had issues with the platform because it keeps freezing. No, I mentioned them. I mentioned them. Hey, what's going on? EBP, man. EBP will save your life. Just proves it, right? Look at this. Guess what we saw on this time frame, right? On the daily time frame. EBP, man. And also, like, sometimes the EBP, it's gonna be very difficult to enter on this one, but like, there's actually a very beautiful inversion right here. So if we sync that in there, but again, it was just a time window. I'm not gonna trade euro in Asia. That's just not gonna happen for me. So it's unfortunate. And then even in London, we just ripped. We didn't really see much of a retracement, you know? So it's unfortunate, but that's just the name of the game sometimes. Let's go to NQ now. So we had a rally back up into this fair value gap on the 4-hour again. Obviously, nothing's going to change on the 4-hour time frame. So yeah, again, guys, I'm just trying to show you guys like what market conditions I personally avoid. I don't care if NQ has a 1,000-point rip or a 1,000-point drop. Just because the market has a move does not mean it's a tradable move for the trader. Because again, if your rules don't tell you that there's a setup, then you just can't really trade. I know that's why I don't really like live streams so much, because it's like if I don't see anything right now, if like let's say I wasn't live streaming, what would I be doing? Bro, I'll just be doing work outside of like trading. I have other stuff I got going on. I'll just be focusing on that. Maybe go grab some breakfast, just go walk around, and then just wait for the next 4-hour candle, or wait for the like after the market open to see what's gonna happen. Because as of right now, if I don't see it set up on the 1-hour, the 4-hour, I don't go down to the 15-minute time frame. I only go down to the 15 and the M5 if I see a clear setup on the 4-hour or the 1-hour. But if I don't see anything super clear, or I think that the market might chop, or I think it's lower probability, I'm just not going to look for any trades. Fundednext is no more. Yeah, man. So if you guys don't know, Fundednext, the futures firm, ceased operations yesterday. And to be honest, man, like, I know a lot of people shit on them, but I just think, if I'm being honest, I think what happened was they probably just took on a little bit more than they can chew. Because if you obviously they have funding pips, which, bro, like, we're just operating one firm is a huge endeavor. And not only that, then they also had the forex broker that they just opened up, and now the futures firm, right? Well, the futures firm has been around for a little bit, for a few months now. I just personally think they took on a little bit more than they can chew, and they kind of saw that, and things were going a little bit south, and they just ultimately just ended up choosing to close up and then just, you know, issue refunds. So yeah, it's unfortunate, man. But like, again, like, I'm the last person to talk, right? Like, if you guys have been around for a while, like, I was part of a firm that ultimately failed and collapsed as well. So it's like, I know firsthand, bro, like, it's difficult to manage that business. It really is. Now, some people will blame them for like making rules are too easy or making the accounts too cheap. Listen, man, like, some people are going to complain about that, and I understand, but like, you know, it was a marketing. They viewed it as a marketing expense, take a little bit of a loss in the beginning, in terms of cash flow, and then just try to get users and customers on the platform. It's not like, I don't think there was any malicious intent in the beginning to do this, but you know, maybe they just bit off more than they can chew, and that happens sometimes in business. See, okay, now this is what I mean about this fair value gap being like, even though we had that rip up, right? Doesn't mean that we're going to start ripping to new highs, because we have another bearish fair value gap inside of this 4-hour bearish swing, right? Now, again, I'm not going to short that, because for me, I don't care if it has a reaction. I want to have a clear target, because where would I target this? The reality is, I don't know what I would target if I was looking for this sell, because this low is also sitting at support. So again, I'm trying to show you guys in real time these different concepts of understanding your market structure, understanding your range. Because again, not every single move is going to be a tradable move. Because again, inside this 4-hour bearish leg, we're going to have a little bit of resistance, and that's what happened here. We have some resistance, and now the market is heading a little bit lower. Now, could this be the start of like maybe a 4-hour bearish EBP forming if this candle flips bearish, right? Because we took out that 4-hour bar, and maybe we flip in the next 18 minutes, possibly. But then when I look for shorts on a 4-hour EBP like that, me personally, maybe I would look for like a scalp at that point. But as of right now, because again, we're still seeing out support, and then maybe we come down into like the bottom end of that range. We'll see. But as of right now, again, just chop back and forth right off the open. If we go to the M5, Big push up at the open, then we drop lower, and now we're kind of banging around. Let's look at that one while we wait for see what happens here. Aussie USD. I need to put this up here actually, next to the euro. He took it last night. Let's see the daily. I know Tom Dante typically he probably saw this EBP candle, to be honest, because for him, he as long as the candle closes above the prior bar high, it's an EBP candle. Now again, I don't know if this exact setup he saw, to be fair. And he uses, I know, the 1 hour time frame. So I'm not really sure, to be honest, what he saw on this one outside of this potential daily EBP. And he probably looked for a reaction at this prior candle's high. That's typically how Tom Dante will trade that. Again, I don't want to, like, again, I don't know if that's the exact trade that he took, but yeah. That's the only thing I can see based off the daily and the 1 hour. Because I don't think he trades the 4 hour like that. He primarily focuses on daily and the 1 hour. So maybe he saw this and then he saw like this, he calls this like, I know everyone looks at this as a fair value gap, but he calls it like the last high pre-breakout. So the last high before the market has a push up, and then he'll probably look for like a smaller entry on the 5 minute, 15 minute, maybe stop loss below this thrust candle right here. If you don't know what terms I'm talking about, guys, then it's completely normal. So I would not be shocked if he took a trade maybe like this. Maybe didn't catch the full move, but yeah. But something like this is why, if I had to guess, it would be something like that. Yeah, man, that daily inverse fair value gap was it on the euro. This one was, but again, like, I'll be honest, like, would I have expected a big daily candle like that? No. That's the thing too. Sometimes people will see this big move and they're like, "Damn, I missed it." But it's like, you have to ask yourself and be very honest. Did you miss a setup that you were actually looking for? Now, again, if you were looking for like, "Oh, well, this euro is going to start the move back up into 1.180s because of my technical analysis or my fundamentals," I understand if you have FOMO. But then it's like, this is a pretty big move, man. This is not a normal move for the euro. Like, this is 130 pips in literally one overnight session. The problem is really just the entry, right? Like, where would you have entered? It would have been difficult. Like, yes, could you have just entered straight away on this retest and then put a stop loss maybe below that zone? You could, but then this might happen over time. Okay, so NQ is recovering a little bit. This is a good question. So what happens when the stop loss is a little too big? So number one, if your stop loss is fairly wide, if you're trading indices, you're gonna want to use micros. That's number one. MNQ, MES, or MGC if you're trading gold, right? So that's number one. Because with NQ, you can only use like per one contract. It's not like in the CFD space. So if you're trading with like a CFD broker, you can do 0.5, 0.25 and stuff like that and adjust your risk. The problem, this is the thing with the wide stop. With the wide stop, it doesn't really make a difference. It's just, and what do I mean by it doesn't really make a difference? Like with a wide stop, the truth of the matter is this. Like, okay, let's just use this as an example. If like, let's say someone wants short here and maybe they want to put a wider stop like that, right? Number one, you would go on MNQ because it'll be easier to adjust your risk parameters because it's less value per contract. Now, the thing is this, if you want to risk $100 or $1,000, you're just going to use the contract size that's relevant for you. So like whatever amount of contracts that you go short, you're gonna have to just adjust that contract position. Or let's say if you're trading with a Forex broker or a CFD account, you just adjust your lot size to your risk. That's really all it is. So no matter what, you're always gonna lose $1,000. Now, I personally prefer tighter entries because your risk reward is typically better. So if I risk for every like $100 you risk, I want to try to get ideally 300. Right? Even more. I prefer higher risk reward trades. Now, again, will I take a 2-to-1 with a wide stop? Of course. If the setup is really good, like, okay, let's just say I was very bearish on NQ, right? I would just sell this, have a wide stop on position 1. Now, if I get a confirmation and I get another entry like here, this stop loss now becomes at that lower high point, and I can enter another position and I can always keep that same initial risk. So that's how you can also do it. You can, like, let's say you get that first pullback up and you're bearish on a specific setup, you can sell short, wide stop on the first entry. Then on the second entry, if you get a confirmation, like let's just say you don't want to wait for confirmation, you get that first entry, that second confirmation, I'm sorry, that second leg lower, that confirms, you could then add a second position, and that one might be a tighter stop loss because you might be able to get a short here. Stop loss is going to be there because there's a high. You move the original stop loss to above whatever swing high that forms, and then you could look for that next leg lower. And now you have two positions, and now your risk to reward increases significantly. Now I don't know if that made sense, but but hopefully it did. But again, man, trading is like an art form because there's so many ways to kind of tackle these different things. At least he tried and allowed refunds for decrease. Yeah, man, and that's the thing too. Like, listen, this again, I talked about it in my my prop trading Telegram. Like the reality is, like at the end of the day, these firms, man, the more competitive it gets, it's the same exact thing that happened in the CFD space. History repeats itself, and that's why even I told my buddy, like, listen, man, because he was like going for multiple different firms, and he wants to get like multiple payouts across multiple different firms. And I told him, I'm like, bro, that's great. No, don't get me wrong, but I even said like you kind of have to like just be aware that like this might happen. I don't know if he was with Fundednext or not, but I mean, I saw the writing on the wall, man. This is the exact same thing that happened in the CFD space. Now, the only difference is this, I will say, in the CFD space, the issue was the MT5. Like if MT5 did not just nuke everyone, that was the big thing that happened that just messed up a lot of people. If MT5 did not remove themselves from the marketplace, right? Like maybe more CFD firms would have survived during that moment, but that was just a huge, huge killer, man. That was just very unfortunate. Oh, okay, below Friday's low on Euro. And I mean, you could do that, to be fair, but that is a very wide stop. To be honest, I'll say this, man. If you're gonna trade like the daily bar just like that, you could just theoretically put the stop loss like here. You don't have to put it all the way there. It saves you a little bit of room. And the reason why I say that is because on the daily time frame, like if it goes below this order block, like it's probably cooked anyways. So that's like a little bit of a tip. Okay, I'm getting like these phone calls. Yeah. And listen, guys, I understand like trade. Like the thing is this, I know people glamorize trading as like this amazing action-packed thing. But I mean, there's just days where like you just go to the charts and there's literally nothing. And I know it's frustrating as a trader if you just bought a challenge and you feel motivated. Maybe you spent all weekend, excited, like you want to get into the new week, and then you have MLK Day yesterday, and then you have slow price action today. And I know every single trader wants to just trade and they want to find opportunities, but this is the reality of the business, man. It's kind of like one of those things that are just a little bit like mundane, a little bit boring, and just like sometimes you just have to wait, man. It's not the most sexy thing in the world, I understand, but that's trading. Like there's weeks where there's opportunities every day, and then there's weeks where the market might give you only 2 opportunities throughout the day. And the problem is this, I don't want to, and the reason why I say this, because I learned, like, how many times have you guys been in a situation? I can guarantee, I know I have, where like you start off the week, you don't see any setup on Monday, then you go on Tuesday, maybe you see something, but you can't find an entry, and then you get frustrated and you just take any trade, or you just try to force something. Then you just lost money on Tuesday. Then Wednesday, maybe you see a decent opportunity, but it's not like really like that great. You take that trade, maybe you lose money, and now you're frustrated. Then like Wednesday afternoon, you see the most perfect setup in the world, right? And then you have a winning trade. And that one winning trade, all it did was make back the losses. Right? And then you're stuck in this cycle where like you're kind of at that break even stage because of this phenomenon. You're taking like trades that you're taking losses on trades that are not part of your plan. And then when the trades that finally do come to play, you end up just making back the losses and you're kind of flat. Right? Like this happens to so many traders. Yesterday, today, no 4-hour ABP. Later, sound my hands, but again, crazy moves. How do you feel when you have traded and there are such crazy moves? I mean, I'll be honest, man. I think over time you just kind of like you just get used to it. Like I don't. Let me just say this: if you guys have been part of the Telegram, how many plays have I called on a consistent basis, week in, week out? There's always opportunities, man. Always. And you guys see it. Like I've been doing this for like 3 years on public. I think my Telegram is like 3 years old now. Like I've been doing this for such a long time that I see big moves all the time. I just want to be able to take part in the moves that I know I'm comfortable trading. Yeah, my bad. Just putting my phone do not disturb. Keep getting these random phone calls, man. Super annoying. Okay. But yeah, I think it's just experience over time, man. Because at the end of the day, like, there's gonna be big moves all the time. Now again, I'm not gonna lie, it's kind of annoying sometimes if you're waiting for a higher time frame play that you've been watching for a while, and then you miss that one. That's more annoying. But like again with NQ, I don't like even if it rips higher or goes lower. I don't know what the market wants to do here because I don't see any setup that's part of my trading plan. Yeah, bro, it's the same. I'm telling you, it's the same thing as last year. Last first quarter is the same exact thing. And then that's also why I think crypto fell as well. I do think I've said this before. I told you guys I was looking for sells on crypto on this weekly fair value gap. This was a very long time ago, but I said I wanted to see us rally here, have a rejection, and then essentially take out these lows, and then I'll start to add more aggressively. Excuse me, add more aggressively if the market does this. Because if we go to the quarterly time frame, what do we see on the quarterly? Beautiful EBP. I'm telling you guys, this stuff works on any time frame. 3-month time frame, and then when you go to the monthly time frame, you have this beautiful fair value gap. So now, is this going to be the high that the market ultimately fades off of and clears out all these lows, clears out all this liquidity? We'll see, man. But I'm going to be a buyer of crypto for like the long term below 80K. And again, that catalyst is going to be the same catalyst that happened. I think this was also last year. Like last year, January was here, right? Then what happens? The market has a significant drop lower because of the Trump announcements, right? So that's kind of what I'm expecting here. A little bit of a drop into this area and then possibly a rebound. And same thing with NQ and ES from a higher time frame perspective. Now, again, it's a quarterly time frame, so it could happen over a few months. But this is more like for the Bitcoin thesis is more so for like investment purposes. Will the EBP work on 1 hour? Yeah, it does. But the thing is this, you have to, the way I like to use it on the 1 hour is if there's a clear 4-hour direction. So if I have a clear 4-hour direction and then I get a 1 hour time frame confirming, that's usually when I would like to trade it. So you need a combination of the 4-hour and the 1 hour. See how bullish, oh man, I absolutely hate oil. I mean, I'm not gonna lie, man, this actually had a very nice 4-hour EBP. At support, let's see if there was any entry on it though. Yeah, a little bit on this candle wick. Probably just came back and retested this area, this fair value gap. Let's see, did it combine with a daily one as well? Oh yeah, it's forming that daily EBP. See, okay, so something like this would be nice, right? Like when I look for a potential trade, right? Like look at the daily. The daily EBP closes like as is right now. I like this because now we formed a low, and not only did we form a low in structure, Like for you guys that ask about context, swing low, swing high, the market came down into this prior high and we have a daily EBP. Now, that's step one. Now, what's the next thing I'm looking for? Is there a clear upside objective? And in my opinion, there is. There's just fair value gap that's present right there. So if this fair value gap on oil, like let's just say the daily close as is right now, right? It closed like this, and then the 4-hour time frame, maybe we create a fair value gap. Then I would be looking for this type of trade where I'm looking for the market. Like let's say the market closed exactly as we're looking right now. Now I'm looking for something like this, right? Some sort of bullish market structure on the 1 hour to target this 4-hour fair value gap. Assuming the market closed exactly like this from the daily and the 4-hour perspective. Because now we have a prior high that the market closed above. Maybe we create a 4-hour fair value gap, and now I have a clear 4-hour fair value gap. I'm sorry, I have a clear 4-hour structure, and I have the daily bias being bullish. Beautiful synergy and price. This is like the current waves, like you're swimming with the waves. And I have a clear target, right? That's another thing as well. I have a clear target that has not been traded to yet, which is very important for me. Yeah, don't trust oil, but I like this setup. If this was a setup like on NQ, then I'll be more interested. But you guys know, man, my hate for oil. It's like one of the most disgusting pairs ever. The biggest thing I'm struggling with is how do you know whether to wait for London high to get taken out or pre-New York Open? You know, man, I don't want to go on a whole rant about this, but like I see so many like TikTok traders talk about like you got to mark out your New York session highs and your pre London highs and post London lows, and I'm just like, bro, why are you guys marking out so many liquidity pools? It makes zero sense to mark out so many liquidity pools. It is extremely dumb. Bro, I can mark out every single liquidity pool till my eyes are blue. Focus on the most important ones. Prior week lows and prior week highs, prior day highs and prior day lows, and the Asia session range. That's it. Remove all that garbage, man, and just wait for structure on the 4-hour or 1 hour time frame. Wait for a clear 4-hour candle direction, and just ignore all that other crap, man. It makes your life so much easier. I just see it and I just feel so bad for people because, dude, it's so unnecessary. And listen, listen, if someone's profitable, making a lot of money trading those like type of liquidity pools, like God bless them. But it's just the biggest, I don't know. It's just funny because people will say, oh, hold on, guys. One, my bad. But yeah, as I was going on that rant, the truth of the matter is this: like, you don't need all those liquidity pools, man. It just makes it so confusing. It really, really does. Like, if you just understand the 4-hour candle or 4-hour structure, then that's all you realistically need. But yeah, man, I could go on and on about this because I see this all the time, especially on TikTok. Like, oh, the market took out the London session lows and then it took out the London session highs, and then I'm like, bro, what? Like, that's so unnecessary, dude. Let me. One of the biggest is struggling with how do you differentiate whether to wait for London range to get. Oh, actually, never mind. I just went on a rant about this. Like at the end of the day, bro, I just use market structure. Like if I am in a bearish swing, for example, okay, like for example, look at last week. Remember last week I said when the market was above here, right, above the prior day highs, and we had this initial run up. I said I'm not going to look for continuations until like I get some sort of confirmation that forms something in here. And the reason being was because I did not want to take a long after the market swept the key liquidity pool, which was prior day highs. For me, again, I don't care about the London session high or lows. I don't even mark them out. I only mark out Asia range high and low because we know if like the market has a bullish daily profile, we might take out the Asia range low and then we might have a run up, right? Like that's a day, like if I'm bullish on a day, I want to see this price action, Asia session consolidation, sweep, and then push up. I do not even mark. I don't care about the London session highs. I don't care about the London session lows. All I care about is like, hey, can I anticipate the next 4-hour candle? Can I anticipate the next daily candle? Can I anticipate the next daily or 4-hour direction based off market structure? That's all I care about. I don't care about if the market swept London high or low or New York session high or low. It does not make a difference to me. Now, again, I want to preface this. If you're someone who's a scalper, maybe that's important, right? Like maybe you can find scalps off those levels, sure. But for me, I don't really care, to be honest. All right, guys. So I actually have to go ahead and all right, guys. Yeah. So I'm gonna call it on that note. If anything changes, as always, I'll always update you guys on Telegram. But I just have to deal with something right now because someone from one of my stores. But yeah, guys. Again, I'm not gonna trade this price action. There's no clear direction for me either way, and I don't want to risk any capital. Maybe that changes going into the PM session. I will check the markets again around PM session or close, like around like maybe the next every hour. I usually check the next 1-hour candle, so that is something I usually do. This 4-hour candle closed, but it closed inside of this overall swing, right? So I'm not really sure what's gonna happen here. Not high probability for me personally. But appreciate it, guys. And again, stay tuned to Telegram. Just put notifications on because if I do see anything and anything changes, I'll update as always in there. So appreciate it, guys. But yeah, peace out.